You have to remember, it's a team. It's your team. I was thinking about going back to college and getting my law degree in taxation. It'd be cheaper for me to pay $500 an hour to a tax lawyer. I was like, I could make more money doing something else.
And what is the tangibleness for income brackets to participate in these different types of investment strategies?
So if you're like my client, so insurance, taxes, mortgages, if we have a relationship, there isn't an income bracket because we have what's called a pre-existing relationship. So those people, because we have a relationship, they don't have a minimum income requirement. For people that do not know me and we do not have a relationship, there is a minimum wealth requirement of $1 million of wealth, or they make 200 grand a year for the last 2 years, or for the foreseeable future.
For those that don't fall into those two categories, is there something where, like, for instance, for the mining?
I would save up your money and try to accumulate more than that. Another fund that I'm actually working on doing is an NFT fund. I've made 200 to 600% on the NFTs I've been buying, and I'm buying very like blue chip type of NFTs. I'm not buying these wild stuff that some kid made in his garage that maybe can be thousands of percent return. No, I'm buying very basic stuff like Marvel comics, DC comics, Matrix. My Matrix stuff, the minimum doubled, right? If not more, right? Back to the Future, hoverboard, like all that stuff. So those things are things you can get into. Investing on those type of people that have like that much money, I would try to save up to 10 grand, get a good job, and then you could buy your first house. And what did I do? I told your sister to do the same thing.
Yeah.
Right? And she did, and she made like, within a few years, her 10 grand made 70 grand. So where else are you gonna put your money and get, and that doesn't count the fact that she was living somewhere cheaper than what it cost for rent. Oh, then she also had people pay her rent as well. So again, the benefits are very good to be in real estate, and it doesn't cost that much to get in. Now, after you do that once or twice, you have more money. Now you have like, say, 25 or 50 grand. Then you can look into doing some type of syndication. If you have 25 or 50 grand, then you can be part of a syndication. Now, let's say you're not accredited. Well, okay. Well, you can join our accounting firm, our insurance agency, or the mortgage company. So then we'll have a pre-existing relationship. We'll have some talks. We'll get to know you. Then we'll be able to make exceptions to let you in because the law says it's allowable. Yeah, follow the rules. There is a lot of good rules because there is people out there that are syndicating that do not know what they're doing, that aren't always ethical. So it's really important that you have to know who you're investing with. Can you explain what a 20 pass-through deduction is? Okay, so an 1120S is 1120S and 1065 is a pass-through. There isn't a tax on that tax. You don't pay income tax on that tax return. It passes through to the owners, and the owners will pay the tax on their tax bracket. So that pass-through deduction of 20%, I'm not sure because he's kind of mixing these together.
Okay.
Now, let's just say you had a loss from one company and it came to your tax return, and you had income from another company. The income, let's just say hypothetically on that income, you could owe 20% income tax. So you made $100,000, you owe 20% income tax, you'd owe $20,000 on that $100,000 of income. If you had a loss of $100,000, or you had a real estate investment over here, you invested in a syndication, you're a real estate investor, you had a loss over here, this loss of $100,000 because of your cost segregation, let's just say, came over on your personal taxes. That loss could reduce your income from the other company. So now you have a 20% that you get the benefit, and that you have a 20% savings in tax from that loss. If you have the right accountants, because not every accountant knows this or knows how to function it, or is some accountants, a lot of accountants are extremely conservative. So they might not even offer to you or tell you about certain discount options or deductions that are available because they're like, it's not worth it. Now, what I normally do with my companies, we tell you about the different options that are available, and you, the professionals you work with, will determine, are you eligible? For example, I had a client. She said she owns a home and it's a duplex with a pool, and she's building the pool. She says, can I depreciate my duplex in the pool? I said, well, it's not worth it for you to depreciate your duplex because you're gonna have the opportunity to do up to $250,000 of gain on the property, and it's not worth it for you to do it and then try to take it back. Plus, that portion of the pool is part of your house, So that also, it's, the calculations can be very tricky, and if you get audited, some things can come into question. But another option for you is, you've mentioned that you have back problems. If you go to your doctor and you speak with your doctor and you ask them, do I need a pool or should I have a pool to help my back recover? And if the doctor says yes, you should have a pool to help your back recover and so you can exercise. If you provide me the letter from your doctor, your pool is tax deductible because it's a medical expense.
What?
Yes. So $80,000 pool.
No, knowledge is power, and this is available to everyone.
Everyone.
It's
with the
not
right
just
team.
Yes.
You have to remember, it's a team. It's your team. People will come to me and be like, Pascal, how do I learn what you know? I was like, I've been doing this since I was 14. I'm 36. I've been doing this for 22 years and going to all these different people and learning these skills, going to college, working for these big corporations, learning all these skills. I was thinking about going back to college and getting my law degree in taxation. And I calculated, okay, 3 years and about $200,000. And I'm like, all right, the benefits I can get. And then if I start my own business and do this, I was like, wait a minute. It'd be cheaper for me to pay $500 an hour to a tax lawyer than it would be for me to literally be like, oh, I'm gonna save myself and go back to school and pay this money and spend it. I was like, I could make more money doing something else. So that same concept is, you don't need to go and do it all yourself. Hire someone on your team and have them do it for you. Because trust me, whatever you're paying them, it's cheaper than the value you're getting provided. The right team members don't cost you money, they make you money. So previously, I think that client was paying like maybe $1,200 a year for her to get her taxes done. With me, I think that the year that we did her taxes, it cost her $3,600. So it cost her $2,400 more. But she paid $25,000 less in taxes. $25,000. So she paid an extra $2,400 to get $25,000 worth of value.